Hello again traders, Andrew Curry here, and if you go to my website you can sign up to my free trading newsletter. Now I'm back here on the Great British Pound US Dollar 4 hour where we were looking at a double top recently. There we go. That is the double top. And in the video looking at that double top, I ran through my rules for a double top. What constitutes a valid double top? And just briefly again, my rules were we had to have a bullish move, a rejection, another test, and that test, the candle which confirms the double top, must at least touch the highest close of the first test, but must not close above the highest high. And the reason I'm bringing this up again is because I had an email from someone saying, well, why so strict? I mean, for him, it's like, well, surely if it's a couple of pips over, it doesn't matter. You see these trading opportunities where you think, oh, it's closed 1 pip above, oh, 2 or 3 pips, well, that's near enough. The reason you have to be so strict with these rules is because the whole point here is that we have tested rejection, a retest. That's why we need the white space. We need to pull away from it and then come back, indicating a completely separate second test. We must have a point at which we say it must not close above this point, because if it closes past that point, it means the market has settled above that point. The price is settled above that point. If it's just spiked past that point, it could have been a momentary price change that lasted a few seconds. If it's done its thing, it's fluctuated and ultimately settled above that point, then no, we have not confirmed that this is a point at which we hit resistance to going any higher. The reason why it has to be so strict though with the close is because, okay, if it closed way up here, obviously you're going to say, well, that's not it. That's not a double top. That's not it. It tested once, pulled back, tested again, smashed right through. Okay, but what if it tests here? Okay, yeah, obviously so. But what if it tests 2 pips above? It's very tempting to say, well, okay, where's the cutoff? 2 pips is nothing. But what about 3 pips? 4 pips? Well, 4 pips might still be okay, depending on the spreads and the time of night. Yeah, but this is a slippery slope, where what you're doing in the heat of the moment with a trade is saying, I really want to take this trade. If the trade would have been a winner, I'd been kicking myself. No, because what you're doing is you're putting emotion into the moment where you have to press the button of, oh, well, what do I do? Uncertainty. What you want is lovely and mechanical so that you can eliminate the subjectivity and the decision making in that moment, in that second. All that happens is you're making emotionally charged trades, you're making decisions in the moment. What you need is a point at which you say, no, by only a couple of pips maybe, but it's closed above, therefore it's not a valid double top for me. And that's important. You need a definitive rule which says, no, that is a valid double top. No, that is not a valid double top. So you can just see it. Has it closed in the right place? No, I'm not taking the trade. Has it closed in the right place? Yes, I'm taking the trade. Being subjective with your rules and stretching the rules a little bit, before you know it, you're not being consistent with anything you're doing. And if you're not consistently executing your strategy and your plan, you're not going to get consistent results. You're going to get a mess.